Hey, badass business owners, today we're going to talk about taxes. And when you are a small business owner and you're responsible for your own taxes and that scary feeling of when you do not have the money to pay your taxes because you failed to plan for that day. And I'm not passing judgment. I was you. Yes, I owed the IRS almost $40,000 when I first became self-employed because I failed to do what I needed to do in order to pay my taxes. Now that sounds like a crazy amount of money, and it was. And it was several years in a row because it was like a snowball that kept on coming. And this is why I want to get to you as soon as I can, because A, you might be in that spot that I was back in when I had this problem. And I want to let you know there is light at the end of the tunnel, but you also might be starting off and making some very crucial mistakes. And I want to make sure I get to you now so that you can put things in place that are going to help you with that. And some things that I did that I found to be very helpful. And I find that a lot of business owners do, which helps them stay out of trouble as well. First off, folks, you do not want to be in trouble with the IRS. It is no joke. These are the people that can come after your home. They can repossess any money that you make. There are no boundaries for them. It's not like they have to go to court, get a judgment, and then garnish stuff. They can just take stuff, and you do not want to mess with the IRS. So it's really important that A, your first step is to never be in trouble with the IRS, but two is if you are in trouble with the IRS and you've created problems for yourself, you need to make sure that you address it right now. Now, there's several different things that you can do. So I'm going to put this into two different buckets. Let's start with what happened with me, and then we'll work our way forward to what you should be doing today. When I left corporate America, obviously my taxes had been paid for years, and I paid my fair share of taxes. Trust me, I have paid the government tons of money through the years. I had high-paying jobs, and I made some really good coin. And guess what? But those taxes were taken out of sight, out of mind. I just knew what my net pay was every single time that I got a paycheck. I knew what was going to be deposited into my bank. I didn't have to worry about taxes but once a year. And in most cases, I got money back. I had a lot of deductions and I could get most of my money back. And so I got used to that. So when I left and I started my own small business, well, I really didn't make money on my small business in the beginning, but that was planned because I bought a business that was losing money and my goal was to get it to zero. And I still had a lot of deductions. I had some rental homes and some different things. The very first lesson that I learned is, guess what? You still have to pay for your self-employment tax. So even though I wasn't really making any money, I still owed some money on self-employment tax as I did start to make a little bit of money. And even if your deductions can offset a lot of your income, you still, that one piece is always going to sit out there for your self-employment tax. So don't ever think that you're going to have enough stuff to bring you to complete zero, because that is not the case. I also had to live off of some stocks and everything else. When I got into this business, the market had crashed and it created all kinds of mess for me personally, but it wasn't that really got me into trouble. What got me into trouble was the fact that I wasn't putting money aside for the taxes. So I'm not going to go and bore you with all of that stuff as much as it is to keep in mind that as you make money, you're going to at minimum, even if you have tons of deductions and you can write off all kinds of stuff, you're going to have your self-employment tax. So you want to make sure that you pay that. The other problem that happens is we start to make money and guess what? We get in $100, $1,000, $500, and we spend that money. And we forget the fact that at some point, the IRS is going to come knocking for their money, whether that's the state or the federal. In most cases, for majority of you, that's both, though there's only a handful of states that don't have state tax. But at some point, someone's going to come for those taxes. So if you're in the habit of when you get money in, you spend that money, it's going to get you in trouble because you're going to find that those little $100 here, $500 here, $1,000 there, they all add up. And when they add up, there's going to be a percentage that you're going to owe at the end, not only for that self-employment tax, but now you're going to have that state and federal, and those can run for most people almost up to 20%, and if you do really well, even more than that, up to 30%. What happens is, and what happened in my case and what happens in a lot of people's cases is we spend that money because we have to survive, right? So when you're in survival mode, you spend every dime that you have. And what happens is then all of a sudden you get into trouble. Now, let's talk about the fact that when you do get into trouble, there's a couple different things that you can do. One of the things, and I did not take advantage of this, and I wish I would have in some cases, but you can go to a tax professional and they can argue on your behalf and try to negotiate that down, especially when you start getting into fees and additional add-ons and everything else. That is one way to go about that. So make sure you use that. I've had some tax professionals that have been able to get people that owed thousands and thousands of dollars to pay pennies on the dollar if they're really good at what they do. But obviously it's going to come down to your individual case. So don't think that's an automatic, oh, you can do that, because that may not happen for you, because it's all based on your individual situation. Now, the other thing that you've got to make sure that you do is you can file with the IRS to make payments. Now, here's the problem. They usually will not let you make multiple years of payments. I lucked out and I was able to go this route. And I had 3 years that had problems because they were at varying different degrees because of what I had done. And I was able to make these $500 a month payments. Now, you can pick what kind of payment you make, but they have to agree to it. And by making my payments, yes, I had this additional bill for several years as I tried to get out of this, but I was able to successfully get out of it. I ended up having to have a two-pronged approach. Is I had my monthly payments that I was making, and I had to make sure that I was saving for the current year's taxes, because that's how it starts to snowball on people. Because once you realize you've screwed up, you start saving money, but you're still paying that towards the last taxes that you owed, and you're not really saving for the future taxes that you owed. And that was part of my problem in the very beginning, until I realized I had to do both at the same time. I had to be making sure that I was paying and paying down all of my past taxes, and as I could, I was chunking money out of it, which is how I was able to get out of it quicker than what I thought it was going to be able to take. But by chunking money at it, then having money set aside for the future, there was this point in time, and I remember it was a few years ago. It wasn't that long ago, by the way. It was like maybe 4 or 5 years ago. I finally went, oh my God, I don't owe the IRS anything. I had just paid my current taxes, and I realized it was the first time I didn't have any past taxes due as well. So at that point in time, at that moment, I didn't owe any taxes to anybody. And I had some money in the bank already starting to build for the future taxes. Because this is why they tell you all the time to pay your quarterly taxes. Because by you paying your quarterly taxes, you start chunking away at the money that you owe. Now, one of the cool things that the IRS does is they have a website, and you can file your quarterly taxes, and you can also go onto this website and make payments, and you can see what payments you've made. And now when I get big chunks of money saved up, that's what I do. I go file those quarterly, or I go to that website and I put money where it's prepaid towards the taxes that I owe. Now, there's a lot of tax professionals out there that can tell you the perfect way to do this and everything else. But the biggest thing that I wanted to get across to you is it is a scary, scary thing when you owe the IRS tons of money and you have no idea on how you're going to make it up. And it's even scarier because what happens is when that snowball starts taking effect, because now you've got the past that's catching up with you and chasing you, and you've got the future that you know is building up at the same time. Which is why I want to talk about this, because when you are starting a business and you're just getting it going, and maybe you're in that phase where you haven't started yet, or maybe you're just starting your snowball of taxes of what it is that you owe. But here's the key, folks. What really ultimately led to my success was being diligent about it and saying, I'm going to open up a bank account at a different bank. Okay, I have banked with the same bank since I was 16 years old, and I have all my accounts there. I've had all my business accounts there. I've had everything there. But what I did is I intentionally, because of watching and listening to other people that have been in this boat, I went to an inconvenient bank. I went to a credit union, actually, one that I wasn't going to go to, one that didn't make it easy to get the money, and I opened up an account. And what I do is every time I get a paycheck, I put a certain percentage and I move it into that account. And it's out of sight, out of mind. Because when I log into my online banking, I don't see it. Okay. I have to specifically go to that bank and log in to see how much money is in there. By it not being as part of what I see, I don't spend it. I don't see it as part of my spending money or as money that I can reinvest or things that I can do with it. It's just sitting over there. And what's cool about it is I don't take money out other than to pay taxes. But if I have more money than what I owe, I continue to leave it in there and I just let it build. Because now if I run into a problem, I've got that money sitting over there, and I know that I'm always going to have the money for the taxes. And worst case scenario, I have a savings account over there for an emergency. Now, I don't try to think of it as an emergency money, because here's the problem. Be very careful about thinking of your tax money as emergency money, because what's an emergency isn't always an emergency. You know, if all of a sudden you get a flat tire and you need some money, I don't want you thinking your tax money is the place for you to go to get your money for that flat tire. It is a last resort type of thing. It's like you have got to have no other option and then more no other options. Because a lot of times we go, oh, I don't have any way to get this, and I'm going to do it. No, you have to think like your kid's sick and you got to come up with some money kind of a thing. What would you go do to get more money before you'll ever touch that taxes? Okay. You just have to leave the tax money in there, and you have to always have it. Because if you were working for somebody else and you were working at JOB, guess what? They would be taking that tax money and you couldn't touch it. You can't just go back to your employer and say, hey, I know you took out that $500 from my taxes last week. Can I have them back? I kind of have an emergency. You can't do that. So I don't want you looking at your tax account as a piggy bank that you can dip into whenever you need to. You need to have that inconvenient bank, and you need to put that 15, 20%, 25% if you're in a high tax bracket, whatever it is, but take it minimum 20% every time you get a payday. You can do it either when you get, I'm commissioned on a lot of stuff. So on my commissions, I just send the money over after I do the direct deposit. That's how I do it. And then I look at the end of the month going, hey, you know what? I need to move more money over. So even if you do it once a month at the end of the month, or you do it as you get paid, you need to put that money in that account. And then, like I said, every quarter, go put some money into paying the IRS. So that way you get it out of there and you're less temptation because you've already prepaid that money. Now, for some of you, you're probably wondering, well, how do I even know what kind of money that I owe? Well, in the beginning, you don't really know. That's why I say do the 20%, because now you can already have that money set aside and it's whatnot. But as you've been in business for several years and you start to develop a pattern, well, guess what? You're going to know a little bit better as to how much money you should be taking out all the time. You'll be able to say going, hey, I pay my state 7% and then I pay the state 20%. So I need to put 27%. Now, keep in mind, this is not off of your gross sales. This is after your profits, because your taxes are going to take away those expenses. As long as they're regularly deductible by the IRS, you're going to be able to do it. So if we know sales minus cost of goods minus expenses equals profits, then you can assume that it's off of the profit side. However, there is one difference, is you as an employee. If you are paying yourself with both ways, like we talk about, you as the employer, as the doer in the business, and you as the business owner, keep in mind, you're going to have to pay taxes off of anything you personally get paid as well as your business. So if you take $25,000 as an employee in your business, you're going to be taxed on that just as much on the $50,000 that you take out as a business owner. Now, here's the difference. If you are on payroll, where you're actually getting a payroll check and taxes are being deducted, then you don't have to worry about that tax, because that's coming out already as part of that, and you're going to be able to claim that later on. You just need to focus on the other money that you take. But if you're not on any kind of payroll and no taxes are being held whatsoever, you need to be prepared, because you're going to pay that 15% self-employment tax as well as your regular taxes. Yeah, you heard me right. It can be very expensive on your self-employment tax. So it's really important that you are setting aside the money that you're going to need to pay it. And if anything, go high. Put 25% over there. Learn to live off of 75% of the profits of what you make. This way, you always know you have money left over, because technically, yes, it's sales minus cost of goods minus expenses equals profits minus your taxes, because taxes are still going to come off there. I don't preach that side of it, and I probably need to put that on there a little bit more, that you need to make sure that you're setting aside money, because at the end of the day, you don't get to keep all of those profits. Uncle Sam is going to want their side of the money. All right. And don't forget, you're going to have your state taxes, you're going to have your federal taxes, and you're going to have that self-employment taxes. Now, I've been rattling on to this for a while there, but I just know that, you know what, I've had several conversations this past week in regards to taxes, and I always take that as a sign that I am supposed to talk about it. And please learn from my mistake. I did not pay my taxes correctly when I left corporate America and became a self-employed business owner. I didn't do it the right way. I didn't have the processes in place to be smart. I always said, oh, don't worry about it. I will have the money and I will pay it. Well, guess what? That's not the way it works. Life happens. Things come at you. You dip into money, you spend money, and it's going to be gone. I highly, highly recommend that you open up that account at a different bank and you just put money into it. Out of sight, out of mind. You're going to have the money for the IRS when that time comes. And like I said, I am not a tax professional. So please, please, please talk to whoever does your taxes for you, and they can give you much better numbers of what it is that you owe. I'm just trying to share some of the best practices that I have found that help me out, but also that I have borrowed and stolen from other business owners, because when I talk to people that have done a great job in preparing for their taxes, this is the exact best habit that they have. So if it works for the majority of other small business owners, it's going to work for you and I as well. Okay, are there other things that you can do? Absolutely. But at minimum, this is a great way to start to help keep yourself out of trouble. All right, with that, get out there, go kick some butt, go make tons of profits, but make sure that you set aside the money for the taxes. And I will talk to you on the next episode. Bye for now. Hey, badass business owner, before you go, as you know, I'm a huge believer in you knowing your business numbers. After all, it isn't about how much you sell, it's about what you keep. And the best way to grow your profits is to start diving in and understanding those business numbers. To help you on this journey, I have created the Know Your Business Numbers course. We will walk through how to read your profit and loss statement. You'll learn the key calculations that'll help ensure that you're making a healthy profit on all of your products or services, plus a ton of other good stuff that'll help you learn how to use those business numbers to create even more sales and profits. Just check out the link below in the show notes or visit knowyourbusinessnumberscourse.com. So if you're ready to increase those profits, it's time you start diving into your business numbers.